was 40 something. I don't think it was 45. So it was like 42, 43, or 44. I don't remember at this point.
Damn, how do you even
Oh my God, bro. That was
dude,
awful.
that's
I put that all into an Excel spreadsheet.
that's 15 pages per
It was legitimately 8 hours, an 8-hour day of me.
Welcome to the Opposites Unite podcast,
where we discuss real estate and lifestyle topics,
break barriers,
build connections,
and find common ground.
Let's unite.
So today on the podcast, we're here with Zach McReynolds. Mr. Zach, how are you today, man?
Good, brother. Thanks.
Good. It's been a long time. I wanted to have you on the podcast for some time now, and it's cool to have you, man.
Thank you.
You excited?
Yeah. A little impromptu.
Right?
I might have shaved and not worn a hat. Looking good on the big monitor there. Let's go.
You look pretty styling, bro. You're good. You're good to go.
Right on.
Right on. So, we're both in the real estate business, right? We're both doing deals and wheeling and dealing and doing everything to
Making it happen.
sell houses and help people buy and sell houses. And, through all that, I think we have a lot of common things that we deal with. People are always worried about what the market's doing, what, interest rates. And, that seems to be the biggest topic right now, right?
For sure. Of course. Yeah. I mean, they're high.
Right? Yeah. In comparison to what they've been in the last 20 years, I'd say. But before that, they're not that high, right?
Well, I think it's more an affordability concern than it is high rates. I bought my first house in 2005 and had a 6.25 interest rate, but that house was $600,000, and that house today is probably pushing, $950 to $1 million,
right,
at a higher rate, right? So yes, we've had the higher rates, but obviously affordability becomes the biggest concern, and things go up over time. So I think even at a normal rate of inflation, you're expecting things to get more expensive. My grandparents moved out into Santa Clarita in the 60s and paid like $35,000 for a house.
Nice.
Who would ever thought that house would be $900,000 one day,
Well, one thing that I always point out also is that people make more money.
For
right?
sure, of course.
So it's always kind of like a lag effect of the pricing of things going up, and then people all of a sudden getting raises at work, because everybody wants a raise at work.
Right.
But it's kind of a cat and mouse game though, because
For sure.
you're chasing inflation, which is on average 4%, right? And
and everything's outpaced. I mean, these last couple of years have just been wonky, right? If you go back to the pandemic and everything that happened and the crazy rates, and maybe they held on to these low rates a little too long, right? By the time we get to the end of that summer in 20, we knew they dropped rates to make sure to prop up the real estate market as we were going through the pandemic. But as we get to the end of summer, we knew that real estate wasn't a concern, right? We were having the opposite problem.
Things
Too
were moving.
many buyers.
Right.
I mean, we had something that had 44 offers on it. Out here in Santa Cruz, that's 43 people that didn't get the house, right? So, and everybody was trying to take advantage of these low rates. So maybe they held on a little too long to the low rates. If you get to the end of the summer, maybe they start to turn up the rates a little bit. It would have slowed down, the craziness.
I think they try to turn it up, but you're right. They did it too late.
And then the supply and demand drove prices. And then even when we get through the end of 21, get into 22, and then rates start going up, we all thought, I think everybody thought that the higher rates were going to crash the market, right? Go back and look at a lot of YouTubers and influencers and people that are putting stuff out around that time, and so many people were predicting a crash of the market. Well, we've pretty much gone up month over month,
right?
Year over year since.
I think you were showing earlier in the meeting, you were showing the average, right? The average versus the mean, and the medium. The medium is slightly over.
Up $20,000. November 2024 is up. The median is up over November 2023, but the average is just barely down.
Like
but the median's up
right?
I want to say it was 20 or 25. I think it was 785 to 760 was.
So I'd say
and that's including townhomes and everything, not just single family homes.
Right.
So but then the average in Santa Clarita was more like 820.
I'd say there's an interesting point that a while ago somebody told me about, which, and the way they worded it was kind of cool, because they said the don't judge it by the lack of increase. Don't let the lack of increase be called a decrease.
Right.
Right. So if you're growing at 4% every year, but then
Right.
all of a sudden you don't grow, you grow only at 1.
Right.
Right. That's not
Well,
necessarily
we
a
might even
decrease,
see
right?
a downturn here soon, right? Like, we talked about the stats today, in our office meeting, and it feels like there's a lot of opportunity out there. I know for some of my buyers, we're getting, like $25,000 credits, right? We're getting rate buy downs.
Right.
It feels like there's an opportunity out there for buyers. But on the average, prices are still ticking up. So something's driving pricing still. And then as we were looking today, this November had more closings in this 2024 November than the last 2 Novembers of 22 and 23. Now it's a little surprising too. It was actually, fairly
Volume wise, right?
Yeah. Sales units sold. We had more closings this November, and it doesn't necessarily feel like that in the market.
No, it doesn't.
It feels like, but if you remember last week at the office meeting, we were talking 51% of the market is selling at asking or over. 52, remember, it was 52 at asking or over, 48% under. But it wouldn't feel necessarily like more than half of the market is closing at or above asking, because it feels like there's more opportunity.
I remember that under was like 2%.
Yeah.
On average, right? That was like 42.
No.
What was the percentage of the one that was closing
48%.
under?
48% of the market are closing under asking.
Right, and what was it, like 2%? It wasn't
No,
a
it's
huge
barely.
number.
It's like 0.2.
0.2. Okay, so
on
it's like
average,
barely under, right?
Specifically talking about Santa Clarita. Santa Clarita closed. Those stats we looked at last week was from October through what had closed in November, so almost like 50 days, and was selling at 99.8%. So things are averaging closing under asking a smidge.
Right.
But those numbers are a little skewed because the MLS is taking that data to the last price. So it's not really considering original list price. And that's a harder statistic to go grab, because it won't consolidate and give all those in one number.
So it won't show the price reductions that came into place.
So
It'll just the last time it was listed for, and then
or necessarily credits, because that's just list price. So
gotcha.
You know what I mean? If someone got a $20,000 rate buy down credit in there,
and that seems to be a thing that's happening quite a bit.
It feels like it. I mean, some closing costs, most closing costs, there are opportunities out there for sure.
Right. So that's
for the buyer. And then for the seller, I think it's, identify the appropriate list price. And I think you got to really clean, not clean, but beautify the house a little bit before you list it. The tier A stuff are getting offers, sometimes multiples, and still going over asking. We've had some listings that are going over asking. It's still happening.
So the pretty stuff is going
the
quick.
good stuff is going to get the action, right? Because there's buyers in the pool, and something pretty comes on the market, and everyone goes, ooh, shiny, pretty button. And the buyers flock to that one, right?
Yeah.
And things that maybe are a little overpriced or maybe aren't as dialed in. So I think it's just identifying, walking a property and going, what takes this to a tier A? Because let's say, and honestly, this just happened to me on a listing appointment. They renovated the house. It needs a little bit more. Like, they renovated the kitchen. The downstairs is all good, but upstairs has older carpet and needs to be painted as well. Well, I got a quote from my guy. It was less than 10 grand to do all that. If we go on the market, a buyer's going to come in. I say you want to eliminate the yeah buts. If a buyer walks in and goes, yeah, but the upstairs needs carpet and paint, and they're going to over value how much work it needs. So in their head, they're thinking it's 20, 25 grand.
They always lowball, right? I mean, yeah.
Even if they don't know.
If it needs carpet, it's like.
And if it only needed $9,000 worth of stuff, do the $9,000, protect that price, because now you're not going to get hit with a $25,000 credit. Hopefully you can even get 2 or 3 offers. That's how you're protecting your price. Or potentially going over asking is getting multiple offers. If the first 2 weeks you're on the market, you get some showings, but everyone's feedback is, remember, buyers are using all of the money they have available, all of their resources for putting the most amount of down payment that they can come up with, so they can get the lowest possible payment. So having an extra 10 or 20 grand at the end of closing isn't realistic right now, So
they're going to be tapped out. They're going to be in the property. They're going to be tapped out. No money extra to improve the property, to do repairs. So they want it as turnkey as they can get it, right?
So I think you have to, I think that's the move as a listing agent, as a seller, is do the little things. I'm not saying renovate your house. And if you are a seller or considering selling, I would talk to an agent first, because you want to put the money where it's going to matter the most.
Yeah, bang for the buck.
So you are getting the most amount of attention, because what's the goal when selling a house, right? To get it in front of as many buyers as possible, to get as many people through the door. That's how you're going to get the most amount of offers, and in turn, that's going to equate to the most amount of money. If you go, the average days on the market for everything active in Santa Cruz is over 50. So on average, things that are active on the market are sitting for damn near 2 months. You don't want to get to 2 months, because
People aren't used to that, though. I mean, I feel like they're used to a week, like first weekend.
We're very spoiled.
Right? Yeah.
20 and 21 spoiled the hell out of listing agents and sellers. We saw plenty of stuff go on the market during that time where agents weren't even taking professional photos, and maybe it was still getting action and going over asking, but it probably still cost the seller some money, because a better presentation probably would have equated to even more money.
Right.
But it made a lot of agents lazy and not have to dig into their tool bag and get a house.
Things kind of sold themselves.
In a sense, I think.
Right, but yeah, it did affect what you got out. Yeah.
But it wasn't like this. We didn't have things sitting for 45, 50, 60 days. Back in 2018, we got there. That's when rates first went up to 5.25 after the bubble burst and everything. We were at 3% and 4% forever, and then we finally got to 5.25 in 18, and we got to 45 days on the market. So this really is just what we're experiencing in 2018. So it's not crazy.
I agree. It's the same sentiment that I have like from 2018, that same lull.
And we're doing the same thing. Like maybe your kitchen shouldn't be pink and wallpaper. Let's identify that and clean that up and get on the market. So we were having to do that in 2018. It was the same thing.
But when you said about the buyer, like the affordability thing, that is the buyer pool, right? So if people can't afford these homes because they're too expensive, you're just going to have less buyers that are out competing for your home, right?
Correct.
So that's really the thing that we have to, and now we're appealing to only a few buyers, right? And they're being picky,
right?
And they're
being so picky.
Yeah, and they're coming out of pocket with everything, so they're basically tapped out. It's a very, I mean,
and the motivation for the buyers isn't necessarily there, because there isn't a threat of, even though pricing is going up. You good?
Yeah, I guess so.
We're powering through that?
Yeah, powering through it.
Look, we have the most inventory we've had since the beginning of the pandemic, right? Mm-hmm. We opened the pandemic with low inventory, and then we rode that through, obviously, as the piranha attack on all the houses was happening. We stayed in low inventory. We just grew in the last 12 months to 500.
What's the craziest offer you've ever seen? Like 40 off, 40, 50 offers that you've had?
That we had. We had one that in 20, I think it was 44. It was 40 something. I don't think it was 45. So it was like 42, 43, or 44. I don't remember at this point.
Damn, how do you even
oh my God, bro. That was awful. I put that all into an Excel spreadsheet.
That's 15 pages per,
it was legitimately 8 hours, an 8-hour day of me putting all 40 whatever offers into an Excel spreadsheet to just figure it all out.
So you can at least because you want to do all the key terms, right? And compare.
Yeah, you had to line everything up, and God,
that's a day,
grueling.
Man.
I'm not an Excel spreadsheet. I mean, I know it, but that's not
your forte.
That's not my world, man. That was miserable. But how else can you do it? How else? You can't go through. Imagine
your head can't process it, right? By jumping.
Yeah, you have to see it line by line, and then you can start to identify, okay, highest price, but this or that or whatever. That was wild.
Yeah, that's an interesting world, man. Now we got well, you know what? One thing is rates. So what I've noticed is that rates didn't necessarily jump to where. Or drop, right? Everybody was kind of saying rates are going to drop, rates are going to drop, and then they didn't drop. But the stock market went crazy.
Right.
Crypto went crazy.
The crypto's doing good.
Dude,
depends.
We were talking about that. Depends if you're in it, right?
Yeah, XRP, baby.
Yeah, all day. And it just, I think I put a little bit in, and it's like I didn't even think about it. I just knew that the regulation on it was kind of backing down a little bit.
Right.
And then next thing I know, it's like, whoa, okay.
Yeah, I'm not. this is for entertainment purposes only.
Yeah, hell no.
I'm not a
no, I'm not.
professional.
Don't come at me, dude.
But
If, like,
XRP, they've been talking about. I've been hearing about it for years. I mean, this has been going on for before even the pandemic. This
Yeah.
whole thing with, so everyone's been talking about when the is it even litigation. That's how dumb I am. I don't even know. When the case was over, that it probably was going to explode. I was fortunate enough to listen to some of that and buy a little bit.
I was trying to buy it through one of the
Yeah, well, because
apps,
I think
right?
because of the case that I know, like crypto.com, a lot of them took it down. So I think you could only get it through one, and I didn't even get it through that either because I had a hard time setting my bank. Blah blah blah. You like forgot about it. Like, oh, I should do that. I should do that. I should do that.
I finally got around to doing it like in August, and
Yeah,
just dumb luck,
it's doing pretty good.
Yeah,
Let's
I'll
see what
take it.
happens.
I'll take the run all
If
day.
it gets $1,000, screw this podcast. I'm saying it here. Screw us, and I'm just kidding. I'm out.
Right? You'll see me on a different podcast on a boat or something, right?
Yeah, legit, right.
We're moving the studio to a boat.
Right. Right.
And start disassembling. Yeah, dude. But that's a whole nother thing. I had a conversation earlier.
Well, it's gonna be. Go ahead. Sorry.
No. Were you gonna say something more about the?
Well, it just made me think about it because that's what's coming, right? With the XRP, the way that they can move money. I mean, that might change how escrow, how titles work, how
Right.
title insurance, how the transfer of money in real estate may literally.
Well, not to mention the people that have their money in that space. Now they're gonna bring it out and into real estate, right? Because
Well, I'm saying that might become like the escrow holder
right,
because the money
right.
can go in. I mean, it's just a wild.
Like Swift is
Exactly.
that thing, right?
Yeah.
But if they start using XRP or they
Right.
start using Bitcoin or whatever they start using, the blockchain, right?
Right.
If they start using that technology, that changes the game.
It changes everything.
Right.
It's going to be wild.
And that's not only on a national level, that's an international thing, right? So then,
because that's the whole point, right? You can essentially change your money into, pounds like instantaneously.
right.
And look, I'm not.
Yeah, that's outside
I'm
of
not
my
smart enough to
dude,
understand
that's,
any of this.
that's not my
But
space.
sounded cool. Put a couple bucks in. It's definitely kind of fun to watch.
Yeah, for sure.
And if it all dies and goes away, then whatever.
But you know what? Our clients have the money in there, and they're like, okay, so there was
wires, like wiring money. Everything will
it'll go right away, right?
Yeah.
And it won't charge you fees.
well, I'm sure somebody's charging a fee, but it's supposed to be cheaper.
Yeah, like a
You know
couple
what I mean?
bucks or
Yeah.
something to move a lot
Yeah.
of money. That's per transaction kind of
Right.
thing.
But the delays and waiting for that, or even like when we have a client that is using, let's say they're contingent, they have a house to sell, they're buying another home. Well, their proceeds are coming from the sale of the house. So sometimes they don't have cash readily on hand for deposit money, which is typically 3%. So sometimes they got to go clear that out of like a retirement account or something to make that available. There's usually a hold on that, right? There's a couple
Right.
day. So you
gotta
open
pull
escrow.
like a loan from 401k or something.
Yeah, like
right?
401k, exactly, right? You're pulling it from somewhere. There's some sort of clearing period, and that can be a few days. Well, you open escrow, you've got 3 days, 72 hours to get your deposit money in, and now it takes 3 or 4 days to get it out, get it into your account to then wire it from, and we've seen that, that could become a problem.
Well, I was having a conversation with Tampus earlier about this, right? Because I have a client who.
Shout out Steve Tampus.
Yep. And well, I was telling him like, look, my client has money in crypto. So how can he use that as like qualifying? Because normally whenever they qualify, it's like, how much money do you have in the bank?
Right.
How much money?
And
How much money
they
do
won't
you
count
make?
it, will they?
They're starting to.
It's starting
The
to.
conversation is starting to
Yeah.
come around, right?
It's
Because
becoming a thing.
yeah, if somebody's got $5 million in crypto, can you legit use
And
that?
they don't necessarily want to get it out because
Right.
crypto is,
It's pointing up, right? No, it's straight just
moving faster
hockey
than
stick
you
out of
moving.
control.
Imagine taking $1 million out of an account and putting it in a bank account, and then crypto's moving
Doubles
up.
again.
Like you lost money.
Yeah. So people aren't quite ready to do that. Although if they have to do that, that's what they'll do. The question is, will
Does it
they
count
use?
as
Yeah. How do they?
Yeah.
How do you use that?
Proof of funds.
And not only that, like, okay, so there was a loan back in. I haven't used that in a while, but the way it worked is that you had to have like whatever your payment was, you had to have 3 years worth of reserves.
Right.
If it were the 401k, you had to have 3 years worth of your payment. Okay, so if you had like 70%, because you can only pull out so much of it, right?
Right.
Of your 401k, because you'll get taxed and
Right,
get
right,
hit.
totally.
Whatever that amount is,
Yeah.
it has to be enough to cover that.
Right,
and
right.
if that's the case, then they'll do you they'll give you a loan for that.
Right.
So I was asking him that question: can we use that in crypto?
Yeah.
And he's
Like borrow
telling me,
against it.
just
Yeah.
use it as a reserve.
Right.
The reserve requirements in a loan. And he said it's coming, but it's not quite there yet.
Right.
Yeah, it's a thing, man. It's a thing that's right around the corner that's gonna
Yeah,
change.
it's actually a good question. So I was just thinking that. What if you did have $1 million in your crypto.com account? Could you get a loan for the house against that
Yeah.
and keep your million, like not buy cash, don't pay cash for the house, get a loan against $1 million, pretend you don't have any income.
Right. Well, that's kind of like the Elon Musk thing, right?
Can you
He owns a ton of stock in Tesla, X, or whatever, all the other companies he owns, but he doesn't draw salaries. What he does is he takes loans
Right.
against his stock, and then that's what he lives off of.
Right.
Doesn't sound like such a bad deal, especially because you don't have to pay taxes on a loan. So it's a strategy, right? And especially because that stock just keeps going up.
Right.
Why would you want to pull your money out of it?
No, exactly. Especially at the rate of what XRP's been doing. To take it out and use that money for something, you would lose money by taking it out.
So if you leverage it into real estate, you take a loan out, and then real estate continues to climb. That seems like a smart way to move money.
Let's buy more.
Yeah, definitely, right? That's the plan. And the global markets, I don't know, like I worry a little bit about like the petrodollar, because that's backed by the US dollar, right? And then there's the USD. I guess I'm getting in over my head with regards to
way over my
understanding
head,
that.
because I don't even pretend to understand, I know real estate. I stay in my lane.
Yeah, and well, man, that's what dude, you're good
But
at
I think to your point, there's some sort of shakeup coming, which I think is what they might have been against on this XRP level, right?
Right.
Because, and again, I'm not an expert here, but that seems to be the shakeup that they didn't want to see happen.
I think they're trying to control it. I think if anything, you'd want to control it. If you're the one giving out loans, you're the one controlling the money flow, right? And you're giving it to people for specific reasons. You don't want money to go all haywire and come out of nowhere, because then
and the power brokers that are brokering it, they don't want to see their world change, right? Like there's a new thing coming that's some crazy technology that's going to change how people move money around. That sounds like that's going to piss some people off.
Well, definitely, and I think that's why XRP was in that litigation, right? Because that was
I don't know too much about the details, and I don't know what
this
entity isn't a
was.
Conspiracy theory podcast, I don't think, right?
No, we're gonna try to stay out of conspiracy.
I don't know anything about it. I'm just saying, they're just on the surface talking it out. Yeah, that sounds like.
But like real,
that was coming for some people's money.
Yeah, but real world, right? Not conspiracy. Like XRP just went wild, went like 4 or 5 fold, right? So if that happens, that's real. I mean, where did that come from? The regulation went back. I found a place to put some money in, and then now it went 4 or 5 fold, and it's just
the availability alone. Yeah,
That's
exactly.
just a real world thing, man. It's interesting. Well,
times are changing, my man.
Yeah, the world's changing.
How fat do I look in this?
You look good, man.
It's oversized. So I think it's adding like 20 pounds on the TV here.
You got that like what do you call it? What's the Yellowstone dude?
My mom bought me this for my birthday, and she lives in Washington, so this feels very Northwest.
I don't know. Just talk about basketball, man.
Okay.
How do you feel about like basketball nowadays, being a little more seasoned?
Old. Hey.
Did you see LeBron yesterday?
No.
Oh, dude, I was watching him yesterday. They had played Sunday, right? So then they played yesterday was Monday, and he was just tired, man. And he was in there, and he was the first time he hadn't hit, or he hit 10 points, or that was immediate.
He's got like a crazy streak.
Yeah. But it was the first time that he hadn't in like 2,300 games. Wow. So it was an insane amount. Like,
well, we're both older than LeBron.
Right.
Playing 2 days in a row sounds wild, and we're not playing at that level. I'm in my now late 40s, and damn, man, everything hurts in the morning. I mean,
know.
Legit.
You know what?
Achilles, calves, it all hurts.
You know where all the muscles are and stuff. You start learning about new ones. All of a sudden, you're like, "That's a what?"
Yeah.
I
But it's fun. I love it. I love basketball, man. Basketball's been my absolute everything. Like that's been my safe space, my place to go when I'm not happy, down, whatever. I can go play basketball. It's freeing for me. It's thoughtless in the sense that I don't feel the weight of whatever my problems are. Like it's always been this thing for me that I like. If I was sick, I would go play. I would feel better. If I'm not in a good mood, I go play. I feel better. Like it literally is my everything. And I personally have learned a lot of life lessons out of playing basketball as far as, living up to a challenge, rising to the occasion, getting the butterflies, being afraid and overcoming that fear of being afraid to do something, walking away because I was afraid because I felt butterflies, and then being mad at myself for having walked away because I had butterflies, to then forcing myself to go do it even though I was scared out of my mind. This is all back when I was 17, 18, 19, whatever, playing basketball.
I remember you telling a story where you would sit there at night with your headlights on and trying to learn how to dunk.
Yep, and that's another great point. I worked at Chuck E. Cheese. I'd get off work at 11 o'clock at night. I was 17 years old. I would drive. I would pull my car up on the curb at the park in the valley and turn on my headlights, and I was obsessed with trying to dunk a basketball. And the moment I did dunk, I also then dunked it the next time and the next time. And I always go back to that moment in my head because what changed? It wasn't that my calf muscle just got good enough to give me the proper height. You know what I mean? Like, so the moment I did it, it really just unlocked something in my head. I now knew that I could. So 1,500 tries up to it or whatever it was where I couldn't. And then the one I could, and now I can. It was this unlocking thing in my brain where I now know that I can, and now I could. I now dunked it.
How tall were you at that time?
Like 5'9".
Holy
I
shit.
grew. I'm just under 6 feet now, like 5'11 and a half or something like that.
Right.
But at that time, I was 5'9", graduated high school, and I was dunking at 5'9", and then a couple years later, so I think I was like 20. People would ask me how tall I was, and I'd be like 5'9", and people were like, "There's no way in hell you're 5'9". And I like bet a guy at a park who had a measuring tape like in his car, and he went and got it and pulled it out and against the pole, and I was 5'11 and a half. Like I didn't even know I grew. Like at 18, 19, 20, I grew.
Just grew 2.5 inches and didn't even notice?
Yeah, legit. After 18, because when I was at Chuck E. Cheese, I definitely was still under 5'10" when I like first was able to.
So you were running around lying to people.
Yeah, but like unknowingly, and like bragging that I was like 5'9" and dunking. People were like, "Dude," but what my point was is like I learned something about myself in that, and I learned all these life lessons in basketball, like the difference between believing and knowing you can is the only thing that changed in my head, and why couldn't I do it 5 tries ago? But now I can. I know that I can.
Is it that like glass lid kind of thing?
I think so. And I mean, my own personal takeaway from that was practice, learn, but believe. And the belief is enough because it just changes something inside.
Well, I think you learn too, right? I mean, there's kind of a point where you like have a limiting belief or like that. When I was talking about the glass ceiling thing, it reminds me of the story of the grasshopper, like in the glass jar, right? Where he keeps jumping up and thumps his head, and after a while he just stops jumping because he doesn't want to thump his head. And then they take the glass off, and he just still doesn't jump.
Right. No,
right?
legit.
Even though he can, and then for the rest of
that
it,
meme of the guy like digging, right? And he like is the 1 inch away.
Right.
I could have quit.
No, but like the whole thing, the thing different about this one is that the whole time he could have jumped higher, right? But he didn't want to because, I mean, for me, like getting up in the air and you're like that feeling of you getting like off balance, it freaks me out. And for my knees, right? Like that's still a thing that I deal with, going up in the air and then like you get bumped by somebody and you kind of go a little sideways.
Oh yeah.
And you're just like, oh crap, like you know what I mean?
I took a lot of spills, but because then I was just trying to dunk all the time, dude.
Well, being 19, I would take those risks, but I think now though,
we'll never know that feeling again. Maybe we should go to one of these like elementary schools that have like the 7-foot rims. I wonder how many of us would get hurt if we did that.
We'd all think we were like all of a sudden
And
7
somebody would
footers.
get- yeah, something that feels like that wouldn't go well.
Well, it might. I don't know. That'd be an interesting. We're gonna have to propose that to the crew to see
Right.
if that'll fly. But I don't think so. For some reason, I think everybody
know.
would be like, "That's stupid." Yeah.
No, I think that everybody will know we'll get hurt. Someone's getting hurt out of that. Maybe a couple someone's. If
Well,
you
dude.
could dunk it on my head,
Well, like this is the thing. The
the aggression level.
if
would
we
go up.
can't dunk, now the guys that can dunk can dunk. Now the guys that could dunk before
Yeah.
can pretty much like
oh yeah.
matumbo that thing,
Yeah. Well,
right?
they can't.
All right. But anyway, so like,
Hold on, real quick, because this is crazy. So literally, I got caught in the thing. Metal hook rips my nose off. I have to drive to Woodland Hills with my nose ripped off.
oh,
My cousin was with me. He's like, do not look at this thing. Like, holy crap. So drive all the way to Woodland Hills. My parents are home, no cell phones. Get in the car with my sister, and she said they went to the movies. We have no idea what movie they went to go see. There's 3 movie theaters around my parents' house in Woodland Hills. And me and my sister drove to movie theater A, movie theater B, movie theater C. Got the manager from each one and walked through theaters just calling my mom's name. And then finally the third theater was the last theater they
oh
could
my
have
God,
possibly gone to.
the luck of the draw.
Yeah.
You got the third.
It was like the last possible option.
You
The
didn't go to the
last-
hospital first, or
I was like 17. I didn't even know what to do.
oh damn,
I
dude.
didn't go to the hospital.
So you're walking around like for maybe what sounds like good over an
A
hour.
couple hours before like and then like walking through the movie theater. I'm like, Mom. And then my mom finally was like, Zach, like, what are you doing here? I'm like, I ripped my nose off.
Oh
She's
damn,
like,
dude.
"What?"
Well, you know what I think? Like when you're younger, you heal faster, right? Or like,
Yeah, I thought it was rad.
you
I
thought it
mean,
was rad.
I didn't think at all about like how screwed up potentially like my face could look, my nose could look. It was gnarly, bro. The fact that it even kind of looks
You
normal,
can't tell
there's-
at all.
Well, there's some weird scarring under the bottom there, but like, yeah, you can't really tell.
Yeah.
I mean, I could see where it was, and there's like weird scar tissue in there, but like, yeah, like I came
That's
out,
pretty.
I came out
That's a
good.
pretty crazy basketball story. Injury from like
Yeah.
that's a bad equipment
I
thing.
broke my sternum trying to take a charge once. Cracked my sternum.
I feel like I took that one time from He-Man, dude.
Yeah.
Dude, that dude's big, man.
Big.
He moves hard, like,
and, and he's fast, and he's
and he's just
muscular.
very powerful. And I was just like, ugh. But yeah, remember you hurt your what did you hurt your
I tore my plantar.
plantar?
Yeah.
That was a
the
pretty good
tendon.
one. Did you have that look on your face like I'm done? That's it.
Oh,
I'm
I
not-
thought
I'm-
it was.
Yeah.
I thought I was never going to play basketball again because, I'm almost 50.
Right.
I thought it was my Achilles. So I figured
yeah.
that's a crazy injury for anyone. Even top tier athletes don't come back from that. So, most of the time they're not the same, at least, even if they came back. When Kobe hurt his, like, no one really thought, we thought that was the end of Kobe.
Yeah.
So I just figured, shit, I might be like actually done.
I did that to my knee maybe 3 years ago, and I took a year off.
Yeah.
That was a year, man. I didn't think I was coming back either.
Yeah, same.
'Cause,
I
like,
tore
when-
my knee a while ago too.
When you have that like feeling, that instability in your knee, that's not a that's
you're afraid. You're
Yeah.
afraid to do anything. In basketball, you're constantly moving different directions, planting, pushing, pulling.
and then
it's
when you
super
get
scary.
it back, you're not so quick to want to go out there and like risk
Yeah.
getting back to
Right,
that
'cause it was a
instability.
year down.
Yeah.
Yeah, legit. No, that's like, that's how I got over 200 pounds. I tore my knee. I don't even know what year that was now. That was probably like 8 years ago. So maybe I was like 41, 42, tore my knee. And then I didn't play basketball for like 2 years. And that's like, I was probably like a $185, maybe max. And then all of a sudden, like one day I wake up, I'm 220. I was like, ugh, I'm not.
Do you think basketball like has made you, competitive, or that's just kind of your nature? Like, cause in real estate, you're really competitive, like, right? I mean, we love to win,
Yeah.
but how would you compare those two things?
I would say but I fell in love with basketball. Like I fell in love with it where like, from 13 to even into my like 20s, I might have played basketball 5 or 6 days a week, like that whole time. Like I loved it. I'd play basketball over almost anything. Like that's just what I wanted to be doing all the time. So I love, that's what I'm saying. Like I loved getting scared. I loved traveling to courts and trying to play with guys that were like really good, but like literally being so afraid. Like
Was
I
that
don't
like
belong here.
like an adrenaline rush?
More like the butterfly feeling of thinking you're not good enough, of like an imposter syndrome, of like thinking I don't belong here, that you shouldn't be here. And it's crazy what our brains do to us. That whatever that weird thing is in our head, that self-perseverance thing that is making me sit in my
You gave
car.
me like a Woody Harrelson vibe right there, like on men, you know what I mean? Wesley Snipes
but
and
that
stuff.
happened to me. I'd sit in my car, hands on my steering wheel, and didn't get out of my car, and started the car back up and drove away, and was like so disappointed in myself.
Because you didn't get up there and go.
Yeah, because I was afraid, and I didn't even walk out of my car. You know, to go, because walking up and going, who's got next, when there's 25 people standing around and like the games are intense, like that's a real feeling, man. And like, but that's my point. That's one of my biggest life lessons I've ever had, was then making myself go back and then getting out of the car, overcoming that fear and this thing in my head of it telling me you're not good enough, don't go out there, don't do it. And then overcoming that and then getting out there and playing fine, being good, being decent. So not adrenaline, but I do think in my life I started looking for those challenges, trying to challenge myself, you know, because what stops people, I started my own business very young.
And that's what I was
in my teenage years.
In my mind, I'm thinking there's a correlation between that and like the entrepreneurial spirit that we have within our like businesses. Because I mean, really, like if you don't sell, you don't eat.
Yeah, every day. I think what it's taught me is don't rest on your laurels. Just because I've had good past success doesn't mean I'm going to have more success today or tomorrow.
Right.
Every day's a new day, and every day we are broke and jobless.
Right.
And you've got to figure it out 100%. And like there is a lot of fear in that. And I think there are a lot of things that could have made me walk away. But because of these things, because of that, identifying that in my life, and when I find myself being afraid or worried or concerned, okay, what am I really experiencing here? And what is the overcoming thing here? But why do we have that as human beings? Why do I have something in my head that was like trying to stop me, talking myself out of walking up to a basketball court and playing basketball?
It sounds like a defense mechanism, right?
Yeah. And we have that in business, and I've had that many times. I've you know, reincarnated myself in business multiple times to this point in my 40s. You know, I owned a store out here in Santa Clarita and lost a lot of money and lost everything. House, car, was down to nothing. I had no money. I was dead broke.
Yeah. I know the feeling.
Actually worse with debt. You know, you owe credit card companies for the processing software.
You're upside down, right?
Negative.
But I think that's part of like learning too, right? Learning how not to lose is by losing. Like that's
Right.
Seems to be a common thread with people that are successful, is that they lose and then you don't like the feeling of losing,
Right.
and you know what you did wrong and you know what not to do again, right?
Yeah,
So
I'm
you
more
learn.
afraid of not trying
Yeah.
than losing.
Right, but you know what? That's interesting. But if you don't, when I was in the car business, I made a bunch of big mistakes, and I just wanted to go home, man.
Yeah.
And I went up to my boss, and I just told him, man, I'm done. He's like, I just kept screwing up. Everything I did was screwing up. And he's like, Eber, if you don't want to make any mistakes, just don't do anything.
Right.
I didn't understand what the hell he said to me, man. Claude Dissinger, this guy at the Chevy dealer out here. I was like sitting there, and I was going.
Well, great advice.
I didn't know how to take it though.
Right.
Like at that time, I didn't know if he was
When
talking
did
trash to me.
When did that click to you?
Oh, years later.
Right.
Years
Isn't
later.
that crazy? Like,
Yeah,
what an
yeah.
epiphany
I
that
still remember
day.
his name to this day,
But
and
the
I remember
moment
that.
you
Yeah.
thought of that thing and it actually made sense to you, like, holy crap, you just
He
you
blew
unlocked
my
it.
mind, dude. I didn't know how to take it. I didn't know if he was telling me to go home. I didn't know if he was telling me to like just get back to work or like what to do.
Yeah.
And I just he just threw me for.
Yeah, he
threw,
Confuciused you.
Yeah, dude. He was walking around with a little staff,
Yeah.
dude. You know what I mean? Like,
Yeah, that's dope.
it's so interesting because he looked like a character, like those white short sleeve shirts with like the little pockets. You know what I mean?
Yeah,
just
yeah.
total like a protector, like the
protector.
glasses,
Those are
gray
right.
hair, comb to the side. Just
I love
just a professor,
I
man. He
wanna
looked like a
bring back
professor.
Pocket protectors.
Rock a pocket protector, yeah. That's a look. I don't know if that works with your
I'll try it.
with
try it tomorrow.
the woodsy look.
Yeah, it doesn't work with that. It would have had like a
Yeah,
like a
camo
knife
one?
in it. Yeah. Like a compass and a knife.
That's a different tool belt, right? It's just not in your belt. It's on your shirt.
But
Right on, man. Well, I mean, this year's been a challenge in real estate, right? So if we get back to that for just a minute, like the market is turning, but it's just like it seems like it's just slowing. It's not turning.
I think if you're comparing it to 20 and 21, like you got to let that go.
Jesus Christ!
Not
I can't
let that go,
I can't.
bro.
I know I can't drink
That's the
nowadays.
second time I ever spilled that cup. But
It's hard to maneuver this thing
Right, for
around the
sure.
microphone and
Should have
like
kept it in the can.
yeah,
Are you afraid
No.
of product placement? You want
Probably.
to get sued by
yeah.
Coca-Cola.
I'm gonna try to tax me.
But if you look back and compare it to the year in like 18, then we're not that far off, right? And we just had, we went from 3%, sub 3%. I bought a house in 20 and got a 2.7.
Right.
If we went from that 2 years later, we got up to like 8%, 2 to 3 years later.
That's fast.
We got to
man.
6 and then 8%. That's freaking crazy, bro. So it's surprising we didn't have a crash, that there's still enough demand to power us through that nationally, not just here in Santa Clarita. That who would have thought 8% we still have month over month increases and year over year increases. Now, sales volume in Santa Clarita is down dramatically. Our May, June, July might have been, I'd have to go back and look at this, but either the worst May, June, July as far as how many houses sold in Santa Clarita since 2008, or it was like maybe 2011 in there was the worst. But basically it's the worst amount of closings we've had in Santa Clarita in essentially a decade.
And that really did raise the amount of inventory. That's like the number one, for me, the number one indicator of like a healthy market is inventory, right? Like how many homes are on the market. Because if you have a lot of supply and not enough demand, the market's tipping in the other direction, right? So that, to me, that's the biggest indicator. And it did go up. It went up significantly. But to go back to what you're saying, the low that it was at, like in the 100, like 100, just, the counter that I always look at of the Santa Clarita Valley specifically, right? And it's around 5 something, right?
We're like 550, 560 active listings right now.
But we were like at 100.
Yes, during the pandemic. We actually got to 108. So that week, if 9 more people had bought a house, we would have got to 99 active listings, and that would have been effing insane.
Yeah.
Because we were so the pendulum swing from a seller's market to a buyer's market is at about 6 months of supply. So Santa Clarita, prior to the pandemic, we always averaged around 300 closings a month. We always sold around 3,600 a year. Some years we hit like 4,000. Very rarely went too far under that 3,600 for most of like since the bubble burst. Figure the decade of 2010 to 2020.
Right.
So if we're averaging 300, then obviously that means that we have to get to 1,800 active listings just for it to switch to a buyer's market. That's not even a bad declining market. That's just a buyer's market. I've been in real estate since 2010. I've never even seen 1,000 houses on the market. It hadn't happened the entire decade. And going into the pandemic, ironically, we come out of 2018. 2018, when rates got to 5.25, we got up to almost 1,000. We got to like 980, and there's a lot of prognosticators here in Santa Clarita going, holy crap, the market's crashing. This is in the end of 2018, beginning of 2019. A lot of people were saying the market was crashing simply by getting to 990 listings, which was only 3 months supply. So it wasn't even enough to switch us to a buyer's market. And there was people out there going, the market's crashing, market's crashing.
Well,
because we got to 45 days on the market.
Yeah.
That's when, now that's just a decent, healthy market. That's not a bad market. You want options. You should be able to take a buyer out and show them 6, 7, 8 houses in their price range. That would be
I
good.
feel like that's kind of where we're at now, where we got a few, we got some options.
Exactly.
Yeah.
And we're technically like only 2 months, right? We're not even that. We're not even at 3 months.
We're 50, right? So
because if we just had, November just had what did we talk today? It was 220, 230 closings, which is the best November we've had in 3 years. But we have 550 listings. That's literally, 2.5 months.
Right.
Almost 3.
But nowhere near 6.
Nowhere near 6. But if we got to 1,200, everybody would be screaming from the mountaintops that the market is crashing.
Well, that's what it did in 2008 when the bubble did burst, right?
Yeah.
Like we started getting 13, 15, 17, like
Right.
100
Oh,
homes.
it went over to 2,000.
Yeah, yeah. So we had those numbers, and that's what it looks like to have a
Yeah.
buyer's market, because then buyers with cash and credit and
But
you know, they can pretty much
Yeah.
they have their
Yeah.
run of the market.
Yeah, and some of them probably even like still bought, because there were still sales, but the market was then trending down. We haven't seen pricing trending down, and we haven't seen that yet. You know,
No.
I thought maybe this November, December, maybe we see things like chill out a little bit, because again, back to, it feels like there's opportunity out there. But if 52% of the market is selling at or above asking, then this trend of ticking.
Well,
up-
that's when the line stops looking flat, like it stops looking up,
Yeah.
looking flat, and then
Exactly.
not down though.
Exactly.
Right. So
No,
we're still
exactly.
even getting flat to some extent, but
Right. But I mean, look, there's so many people want to predict the market now. You know what I mean? Like if you go back and watch The Big Short and you watch Christian Bale's character in there, like predicting what was going to happen, nobody want to listen to him. Well, now you have every movement, someone says this, and that same movement, someone says this. Everything is an indicator for everybody to try to be right. There's been people out there saying we're going to have a crashing market since rates went up, and we haven't. But to your point earlier, at some point it's going to look like it's down. Then that guy's going to go, I've been
was
saying it
right.
for 3 years. But to your point, you said earlier, if every month it went up 4% for 48 straight months, and then it comes down 10, it still was a win.
right.
And if I bought my house in 2005 and I didn't short sell that and I kept it, I'm up on that thing right now.
Oh, yeah.
Not only is the house about 300 more thousand, roughly than it was, and I actually kept it and been making my payments. It's been almost 20 years. I'd probably have that thing paid down to like I owe 200.
Right.
You know what I mean? And it's now worth that. We just put someone in escrow in that neighborhood at 900 and needs a little bit of work. Some have sold in that neighborhood for 950 plus. My house would be 950 ish.
I get kind of frustrated when like the Grant Cardone thing, where he always says like buying real estate, like buying your own home is stupid.
Right.
I'm like who are you talking to, man? Like really,
Right.
like the average guy that goes to work, he has to pay rent. So instead of paying rent, he pays a mortgage.
Right.
Yeah, you have to put some money into the property. You have to maintain it. Over the years, but over the years, man, that winds up being a pretty hefty nest egg for people, right?
I mean, there's plenty of studies, surveys, whatever, that show retirement age people that own versus retirement people that have rented,
Oh,
and
yeah.
the net worth difference is like $400,000 or $500,000.
It's
So
sick.
if you had an additional $4 or 500 grand, and that's a national average. So in SoCal, I imagine a paid off house is obviously, everything's over 500 grand at this point. So you have an additional, whatever your retirement plan was, and then you have an additional thing in your house that, or multiple properties, right? I mean,
Right.
that's really the key. The wealthiest people I've met in my 15 years now in real estate are, not people that invented some app or some crazy shit. They paid off their house and maybe 2, 3, 4, 5 other properties. They're working class folk, and they paid off 4 or 5 houses because you got one you can live in, you got 3 or 4 you can rent out. They're paid off. Rents are $5,000 a month on almost everything. So you've got an additional $15,000 a month in income coming in. If you have 3 paid off and you live in one, or you sell all 4, you're cashing out right now in this market. That'd be at least $4 million, let's say, because almost 800 minimum times 4. Okay,
Right.
so you got 3.2, and you could go move somewhere where they still have houses for 400 grand and bank
and
3.8.
like a river running through your property and like acres
Yeah.
and stuff. Yeah.
So
That's a thing.
the idea, and if you go back to me saying that my grandparents moved here in the 60s and paid like $35,000 for the house, what if they bought
5 of them.
5, 6, 7? They're all worth 900 grand now.
That's wealth, man.
That's wealth, and there isn't probably another way that you could leverage into multiple properties, or there isn't a way that you could leverage yourself into any other business model to have that same kind of wealth security at your retirement age.
I agree.
Are you worried it's not recording?
No, I'm just doing a little systems check down at the bottom. But yeah, you know what? I think that's kind of the goal of like with our clients, helping our clients, right? Is because, like I said, I get upset when people say that, or a Grant Cardone more specifically, is he tells people to not buy their own home, to rent, and then invest because they want to free their capital to try to work their capital. And that's cool if you can do that. But like most people, they put it, I think they go in a 401k, they passively invest, right?
But to that point, okay, try that. How many listings have you had? I mean, I can think of at least 10 right now that, yes, someone had as a rental. People get frustrated being landowners, landlords sometimes. And they go to sell, or they want to move that money around or something, right? And then, so you rented it, you've been there for a year, and now you have to get out. You got to go find another one, right? And your lease ended prematurely. You thought you were going to stay here for a couple of years. Now it's the middle of September, or October, and you got to go find another rental, and you're forced to choose from the few that are on the market, as a rental. So what are you even, can you get into? You know what I mean? Like, then you're not living where you want or how you want or in the place you want. You're forced to live wherever you can get in. And that's a side of it. And what if that happens to you every year for 5 years? Moving costs are expensive.
Yeah.
And at some point, one of those houses isn't going to be your favorite. There might have been 2 or 3 on the market and you didn't get them, or they're not available, or you needed something to move into now.
I just would be pissed to have to live in somebody else's house and not be able to fix something, replace something.
Right.
Like if something breaks,
right.
I'm going to have to put $500 out of my pocket to fix it.
Right.
If I want it, fixed, or I'm going to have to call somebody else to come do it.
No, totally.
They'll show up, they'll do it.
Hopefully.
Yeah. And if I don't like something, I don't want to paint the room. I just don't want to put my money into something that's, if it's not because it's broken, but because I want to improve it. Right.
But that's my point. Like, there's only 4 things available on the market when your lease is up, and you're choosing one of the 4. And what if you hate all 4? You're not even able to pick what you really want. You're just settling.
Right.
And that's annoying. And then you move into that thing for a year. And then what if that one sells, and now you got to move again? And you're just in the cycle of, moving into other people's stuff and having to move when they want you to. That's annoying.
Yeah, basically getting bumped around.
You're not controlling your school district for your kids. There's a lot of whatever. Like, I'm not trying to say you're selling the American dream on why you should buy a home, but it makes pretty good sense. You're definitely putting your money into something.
Yeah, I think I think from just a simple, plain investment perspective, and 100%.
And to your point, fine. Then you live in that rental, but that's the thing. You're paying the same thing, presumably, as your mortgage. Maybe the rental's a tad bit cheaper. Okay, are you taking that difference every month and putting that away so you're actually then are doing something?
And that's another advantage of the forced saving thing,
it's
right?
Forced savings.
Yeah. I've tried to I have explained this. Actually, successfully, I've explained it to everybody except one person. I don't want to put them on blast, but that person finally came around this year and goes, Heber, man, I realize, like, you've been telling me all these years, but has also always kind of made me feel guilty because, like, I'm selling them on something,
right.
And I'm like, dude, I'm not selling you on something, man. Like, realistically, like, I help people become wealthier every year. Every year they go up.
Well, look, if someone was feeling that way 2 years ago when rates went up, you know what I mean? Because now it's more expensive, but our values went up in 2 years.
That's exactly the situation. It's like 3 years ago.
And obviously, at some point here, I mean, obviously, everyone's been talking about it for 2 years. Rates are going to have to come down. They can't stay here. I mean, I doubt we ever get back to a 3 unless, something bigger happens in the economy and the Fed lowers rates down to 3%. But if we're lucky, they wind back down into, a 4.9 would be pretty cool.
Yeah.
I imagine we're going to see 5s at some point here coming up because they just shouldn't be this high. But again, just like we were talking about crypto, I don't pretend to understand how the Fed works and what the hell they're doing, but we know that they're going to lower rates. And what happens? What if we woke up next week with even a 5.5? If they drop to 1 point, you're going to see more buyers jump in the pool. That's inevitably going to drive pricing a little higher. If, God forbid, we wake up one day and they're 4.9, if we woke up tomorrow and there's a big announcement that rates drop to 4.9, holy shit, man. Like, all the buyers, sit on the fence, all the buyers I've sitting on the fence, everyone's jumping in that pool, and the 550 houses we have on the market are going to get eaten up pretty quick. Not enough supply is going to keep coming, so we're going to go back to having low inventory, and then we're back to, would you rather pay, get the house today, or maybe you can get a $10,000, $15,000, $20,000 credit, or that scenario happens when you have to go back to $20,000, $30,000, $40,000 over asking, waiving appraisals, paying that difference out of pocket. I would take this market now. I have a couple properties that me and Sherry bought that we have higher rates on. And when rates were coming down just a couple months ago and we got into the fives, I felt like I'm at the craps table in Vegas because you just wanted to go a little bit lower so we could refi out of a couple of our properties, into a better rate. And we didn't do it because we thought they were going to get better, and then they went back up.
Oh, damn.
But, okay, lesson learned. when they come down again, then just take what you can get.
Lock it down,
Yeah,
right?
get them into the fives. We'll save a couple bucks and, But for everyone else, same thing. Do it now. Get in. Then when rates improve, get your refi, and you're good. You could probably be a little more picky on the house. You can be a little more choosy. You can get a little bit better of a deal. And then you're not having to compete with 4, 5,
You know what?
10 people.
I think what why when the rates come down, what winds up happening is that because the payment on a 5% versus a 7%, that's 2%, right?
Right.
So like if you borrow, let's say $500,000, right? 1% is $5,000 a year extra payment, right? So it's like $480 a month.
Right.
2 points is like almost $1,000. So $1,000 a month swaying in payment, that's a lot of money if you're going to borrow, to borrow, right? So if you come from a 7 to a 5, now that $1,000 that starts kind of catching up to what rents are. So people are like, screw it, man. If I can afford to rent versus if rent is the same thing, either landlords are going to have to lower their rents, which is not a very, it happens, but it's not a more common thing, or pricing is going to have to climb back up. So,
the competitiveness will drive the pricing inevitably because it's going to feel cheaper to all the people that were in the market now. If you've been in the market and rates come down 2%, 2 whole points right now, now you got people that are pushing their value. And then this is what happened in the pandemic, especially the people coming up from Glendale, Burbank, Pasadena, where our prices felt so much cheaper. We had a guy go $100,000 over on a house just to get the house. And I remember it was listed at 8 and he went to 9. And I was like, $100,000 over is insane. But to him, that $900,000 house was still a good investment buy compared to what he could get in wherever he came from. I want to say it was like Glendale or Burbank, right? So and the money was cheaper because the rates were so cheap then. So people going 40, 50,000 over, it was easy for them. Because what's $40,000 when the rates go now down to 5? Your monthly isn't affected that much by that $40,000, especially back then when they were 2.7.
Right.
But all the people that have been active in the market for the last year, if we wake up tomorrow to 4.9, everyone
will jump off.
Is going to go, holy crap, and jump in now and try to. It's Black Friday when the gates open.
That's going to be.
It literally is.
I do feel like something's going to happen at some point where I think right now the stock market's doing so great that nobody really wants to do anything but invest in the stock market and crypto. I think that's where the money's at right now.
Yeah.
But
that's extra. I think that's extra income people. Someone that wants to buy a house, they're probably not putting money into XRP right now. The dream is to buy the house.
Well, I would say investor money. Okay, so if you invest in two things, right? Really, you either invest if you have extra money, you invest it in the stock market, or you invest it in treasuries, right? And treasuries fuel mortgages,
right?
So that drives down mortgages.
Right.
So if you're taking your money right now and you're putting it into stock market and crypto, you're not fueling mortgages. Mortgages aren't going to come down because there's not enough money supply in the mortgage market.
Right.
So if something happens to the real estate, to the stock market and crypto, where that's not such a, people are going to pull their money out and put it back into treasuries where it's safe, then that gives cheaper mortgages.
Yeah, look, again, I don't pretend to understand.
That's my
that
understanding
world,
of it.
And I know what you're saying to be accurate. I don't know what people are thinking and feeling. Right?
Yeah.
We know people that want home ownership. Obviously, it's hard for anybody who was thinking about buying a home during the pandemic years, and now where it is now, it feels like it got away, and I'm sure that's a shit feeling when you could have got a house for. Look, I bought a house in 20 for $800 with a 2.7, had a $4,000 payment. And then a year and a half later, sold the house, the one with the garage door.
Yeah.
That same $800,000 house, I sold for 1.3 a year and a half later. That was crazy. But I sold it because I thought prices were going to go down when rates started going up. I was like, oh, shoot.
You felt,
if
squeeze.
you told me we could have bought a house for $800 and flipped it and made $500 on it in a year and a half, we both would have
bought a lot of houses.
Probably would have bought a couple of them.
Yeah.
Yeah.
We would have sold kidneys or something.
So I got out of that. But that same house in that neighborhood is still 1,213
So it held.
with a higher rate. So that same house payment now is not $4,000.
And you put the garage door in the back of the house, not in the garage.
Yeah,
'Cause,
yeah, yeah.
You said the one with the garage door.
Yeah, yeah.
Like you and I know what that is, but like it was over like in the back
Yeah,
by
knocked
the pool.
out a wall
like,
and just put up a roll-up door into the backyard. I lived in Texas for a few years. It was like a very common thing there. It was like kind of normal, and even on like modern high-rise and stuff. They had
well,
these, like,
it creates like a big opening
Yeah, it was
to the
I thought it was
outside.
cool. It was
Now
cool.
everybody does those like piano doors,
Yeah.
the sliders in
But
the back.
this, I had 11-foot ceiling, so I got the whole thing all the way up, so the whole door. I didn't have a view in that room. By doing that, it made you feel, because now you could see.
the
Yeah,
backyard
if you had a
and all
regular
that.
slider, the
Oh, you still had the
wall,
archway over the top. Not the
yeah,
archway, but
it
the
opened
like
up
the
and you
big
saw
beam.
the mountains.
Yeah,
Yeah.
it did. It made it look grand in there. It was cool.
Yeah, it was cool.
That was a cool house, man.
You know what's cool, man? I gutted the whole thing, and then that was my house, down to everything. Right? I picked the backsplash, I picked the shower tile, like that was my.
Well, that's
house.
probably why you got the 1.3 that you did, because you
For
hooked
sure.
it up.
For sure, but something on that same street, that same model, not nearly as upgraded, just closed out at 1,250. So that price held.
Yeah.
I would think that house would still be 1.3 ish. So yeah, look, the market didn't come down at all.
Keep an eye out, man. That thing might come back. You might have to pick it up a second time.
It's fine.
It's probably going to be all jacked
But
up now, though.
I'm now in someone else's house that picked out their backsplash and their shower tile.
Right.
You know what I mean? And to go do a full reno, like I don't want to do that again. That was like that sucked. I lived without a bathroom for like. I don't even
Yeah.
know. It was like
I remember that.
because
had
that
tile.
was during everything. The supply chain issues were like a problem, so I probably didn't have a shower longer than a normal remodel. But I have no interest in remodeling.
And you
a
were
house now.
pretty like into the tub, and you were in because you always
Don't
you talk about
Don't
ba-
put that on here, bro.
dude. Come
I
on,
like
man.
baths, okay? I like jacuzzis and baths. We play a lot of basketball. I almost need to sit in the hot water.
Well, it's
man.
like therapy, dude. I mean,
I need it. I need
you-
it. My muscles need it.
it's a
But
good
yeah,
thing.
I picked out the tub in that thing. Like I went to a tub place and like I felt like Goldilocks, where like I was sitting in every tub and trying to find the one where my legs would be stretched out perfect and I didn't have to bend them. And
Yeah.
I was like, this one's too big. This one's too small. I literally felt like
You were like, were you in one where you were like all the way like about to drown in that thing?
yeah, no, I found like the perfect one.
You're like in Shaq's tub.
It was great.
Right on. Well, man, I think we had a good little wrap here.
Right on.
You anything else you wanted to discuss, or?
Do we miss anything? Are you good?
No, I'm good, man. I'm good. I'm happy we were able to sit down and talk this out, and
sure.
get a few things off off of your out of your mind and into some film and into some
Thanks,
some
man.
content, man.
This is cool. I like what you did with the place. This is a dope little spot here. Good job.
Thanks, man. I mean,
That's cool.
remember we were discussing doing it in another room, made it work, man. Made it
Yeah.
work. Thanks for tuning into the Opposites Unite podcast. If you enjoyed today's episode, please like, share, and subscribe to our channel. Don't forget to leave a comment for a chance to get a shout out in our next video. See you next time.